All right, to look more at this, I have Professor Ken Ifeh, microeconomic policy analyst, is going to be joining me live from Abuja, while the head of research, FSDH, Ayo Akinwumi, joins me via Skype. He's in Lagos, downtown Lagos Island. Thank you for joining us at this time, gentlemen. Okay, let me start from Abuja. Yes, the central bank governor, yes, I just have it now. It's real. He has retained the rates at 13.5%. So just like what we had before. Were you expecting anything different, Professor Ifeh?
Not really. In fact, if anything, there was some nervousness that because of the two results that we have seen, that is a slight uptick on inflation, and then a GDP growth rate that has also dropped to just over 2%, that was going to spread some fear among some members of the Monetary Policy Committee to begin to say, look, why don't we just go up a bit? But I'm glad that he kept it because it's a good sign. He has just been reappointed, and I think it was positive that he kept this, rather than try to move it up again.
Prof, looking at the fundamentals and all that we have at this time, and even the figures that was just out yesterday. Okay, let me start with the GDP figures that we saw yesterday. Many say we really need to buckle up, that the road might still be very rough.
No, we really have, because, there is no sector that you would look at that rate doesn't mean bad news. For example, if you look at agriculture, agriculture needs to be well ahead of the population growth rate. And our population growth rate is 3.2%. Our overall GDP growth rate has to be ahead of population growth rate. So to have it lagging behind at just over 2% just reminds us we have a lot of work to do. And a hell of a lot of work to do. So that's what that message is.
All right, Prof, I also like us to look at disruptions from the global part of the world, because that is what also the central bank also alluded to, saying that we cannot control some of the disruptions, talking about oil price and other things that affect us. How prepared would you say Nigeria is compared to what happened a few years back when we slipped into recession?
Well, this is a very good question, actually, because we have very little control over the global economic situation, especially against the backdrop of US-China global trade war. Everybody's going to lose in a trade war. Nobody wins. So for us, we needed to maintain a bigger buffer from the perspective of a good differential between what is budgeted as $60 and what the real thing is. The unfortunate thing is that the real prediction on U.S. agency, information agency on it, predicted that the overall average price for crude this year will be $62. Last year it was $71. Now we are so close. We need a headroom. A headroom would enable you to have accretion to our excess crude account and accretion to foreign reserve. So it worries me because that would have impact on the budget. But of course also you need more cushion because of the externalities that we have little control over. And especially as we have very low growth, and we need to move on this growth agenda because that's where we need to take some of the shocks that are going to come, inevitably come.
So in your submission, Prof, would you say that the retention by the CBN today shows that the central bank, other than talking about talking about monetary policies, has done well in creating a kind of accommodating policy, retaining at 13.5%?
Actually, I have thought that maybe, despite the two bad news on the offing, that the government might actually say, look, I'm going down to 13%, just to consolidate the message that I'm out for growth and employment. But it's okay. You don't throw caution to the wind in the circumstance that we have both inflation and GDP growth rate playing up. So I understand that. So obviously the least that we expected him to do was to keep business as usual at 13.5. And don't forget that when that 13.5 came, it was well received by the capital market, the bond market. They all showed positive responses. And it is just a signal. It's not that in itself it is going to cause a sea change in lending ratios and stuff like that. But it is a very important signal because it's a baseline figure. So everything starts from there. But having said that, much of where we require traction is on lending to the SMEs. And you have to remember that quite a while ago, they allowed CRR-based lending, that is cash reserve ratio-based lending, which is about 4 trillion naira of commercial banks sitting in central bank and earning zero income for the banks. And he's saying to them, go ahead and lend as long as it's up 9%, 7 years, and some moratorium, come and take money from there. And I cannot understand why the commercial banks are now jumping on this to make sure that they strengthen the base of our pyramid rather than rush into these treasury bills and crowd out private sector investment. We need to radically rethink what we are doing with our commercial banks right now.
Prof, let's also look at the fiscal side and the monetary side. You know, on this discussion yesterday, I got to remember that there was a particular time where it was identified that there was no synergy between both arms, talking about achieving the all-inclusive growth that we talk about. What's your assessment? Are we better off than what we used to be some years back?
No, I think we are actually, because in 2015, 2016, there was a disconnect between major policy holders. I'm talking about monetary, fiscal, industrial, trade, and investment policies. But from 2017, February, when we had the Economic Recovery and Growth Plan, there was what I would describe as a macroeconomic handshake. And people are now playing from... Look, most of the things that the CBN has done are actually from the plan. What you see the debt management office doing, rebalancing our domestic and foreign debt, are all coming from the plan. So most of the players are playing through the plan. So I understand that, and I think I appreciate that. But we do want to make sure that they up their game by reviewing this plan and then strengthening it going forward.
Prof, there have also been recommendations, I've also heard you discuss about it, that there is need for some pro-growth policies, some decisive decisions must be taken, some strict decisions must be taken by this administration if we are to get this stability that we expect in the economy. Some talked about removal of subsidy and some other issues. Now, what do you think, moving on, what are your expectations? What are the quick wins for us to achieve stability?
Now, what you don't do is to subsidize consumption. That is what you don't do. You don't subsidize consumption. Because if you are subsidizing consumption, you have no way of controlling it. If you are subsidizing petrol, who is consuming the petrol? You find out that only a proportion of the petrol you are subsidizing is actually consumed by Nigerians. And you find out that you are not targeting policy to the people that the weakest in the economy. What you subsidize is production. Because when you subsidize production, it is actually your own domain that you are growing. You are growing the industry. You are growing more petrochemicals. You're giving 75 licenses. How many of them are producing? They're not producing. Because the money, the resources is being taken away to consumption rather than supporting them to create jobs, produce more petrol locally, refine your crude, and then you have less crude to sell. Instead, you sell your produce, your refined products. So I think that is one. But there are many other areas that are getting subsidy that you need to review. But in terms of fiscal, monetary policy, I think the bank is doing okay. I can tell you that. Now, what you've seen is flexibility, although we are running a dual system, a forex system, but there is increasing flexibility on the forex regime. But it will come. We just ask for more and more flexibility. At the moment, if you see one of the flexibilities, which is the exporter-investor window, that has brought in $50 billion in 2 years, beginning to augment our foreign forex revenue. Now, you also have the bank getting very tight on the commercial banks, which is very important, because how can they be paying out dividends when they have net non-performing loans at over 10% instead of even 5%. So it's good for the bank to rein in some of the CBN to rein in some of these banks and to make them go back to the market to attract more capital or let the owners inject more liquidity into the thing. So there are many of those steps that are taken, and then also tightening up on the risk-based supervision of the banks to ensure that they play the game. You know, they should reactivate our real sector. And I also like the way the CBN has intervened in agriculture. Now, let's look at one sector, just agriculture. Our footprint, our geopolitical, ecological footprint, where we produce food, is shrinking and shrinking and shrinking because of the conflict. Is shrinking and shrinking and shrinking because of the conflict in the Northeast, because of the conflict in the Northwest, because of the conflict in the North Central. So this is considered is shrinking. Yet we need to expand, not to shrink, because our population is expanding. So that is why you saw the nature of the intervention is end-to-end intervention in agriculture and selected value chains where we have comparative advantage and where we are most likely to be more competitive. So the intervention is end-to-end. And in fact, if you are hoping to export agricultural produce, you have no chance. It has to be end-to-end intervention, from seed technology all the way through production to processing and then to meeting export requirements, conformity assessment requirements. You have to be end-to-end. Previous policies have targeted segments and then pushed money there, only to find that it is a chain, and it's a very long chain in agriculture. So I think we're going to have good time, I believe, in this next administration.
Well, indeed, I like that optimism there, having a good time in President Buhari's 4 years. That's talking about what we expect. Now, Prof, before I let you go, let's touch on the Economic Growth and Recovery Plan. Beautiful document, beautiful projections, a lot of expectations from this document. How far have we gone? Implementation has always been something that analysts like you have identified. How well do you see us executing this very document?
Well, I'm glad you accept that it is a good document. Nigerians are actually very good in producing excellent documents, but the devil is in the delivery. And I think the jury is out on how far we have gone. But I have to tell you that, at least from policy perspective and from much of the action that we have seen, there's traction. If you look at the investment environment, investment climate reform, there is positive. We've got positive responses there. But we could go further. There are many other negative vibes around from Bloomberg and all that, but we are on the case. That's what you see from Pebec. We are on the case. But also on the monetary policy side, you've seen dynamism, you've seen action. Even the reappointment of the governor of central bank saw how responsive, how the capital market and all that responded. It was positive. And it's all part of good news and confidence to investors that there is policy continuity and that there is effort being made to address things. Then you go to the fiscal policy, we actually do need more from the fiscal policy. This budget delay is just unacceptable. We're heading into June and we haven't got the budget functioning, despite all this said and done. But I know that there are two sides to this story. So but they need to buckle up. And then I also know that the incentives, we need to up our games on incentives. If the 41 items are being restricted, and then we've seen substantive intervention by the CBN on some of the real sectors trying to close the gap, then we need the fiscal policy to meet us halfway. For example, why don't you actually get those importers of this produce being brought into Nigeria from China? Why don't you get them and the Chinese investors to go to our trade-free zones? We have 34 of those. And say to them, look, we want to do business with you, but not when you are manufacturing it in China and you want us to buy it in Nigeria. It's dumping. Come and do it, assemble or do it in our free trade zone. You can export into Africa, and then we'll guarantee 40% of what you are producing. Right. And if they say we need financial support, then that is where you put financial support. to enable our people. And the people that will drag them down here are those traders. So don't imagine these things.
Yeah.
Go with the traders